Nvidia CEO Jensen Huang did an interview on CNBC on Wednesday where he made some shocking comments that really got investors excited about Nvidia stock. So in this video, I'll review those comments by the Nvidia CEO and elaborate on what it could mean for Nvidia stock investors. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. Nvidia's stock price jumped as much as 5% on Thursday as CEO Jensen Huang said demand for its next generation Blackwell chips has been insane. Insane is the word he used. Typically, management of companies as large as Nvidia, when they're talking about demand for their products, they rarely use words like insane. They might say something like demand has been robust or demand is strong. Or if you're really excited about your product and it's really going well, you say demand exceeds supply, meaning that people want so much of your product that it's selling out and you can't produce enough to meet that demand. That's about as far as it goes in terms of describing how excited investors are or buyers are for your products. But Nvidia CEO saying that demand for its next generation Blackwell chips has been insane. That's like 2 steps above saying that demand is in excess of supply. So what we can infer from this as Nvidia stock investors is that demand for its products are well ahead of supply, meaning whatever Nvidia can produce is selling out, and most likely selling out for a couple of years in advance. In the interview with CNBC after the markets closed, Huang confirmed that the chips are in full production despite recent design issues that caused some delays in customer rollout. So that makes it even more exciting that the demand is insane, because production, if you're in full production and you're still selling out and demand is well ahead of supply, that's another level from saying that, well, we're supply constrained and we're not producing a lot, but whatever we are producing, it is selling. Versus if you're saying we're in full production and everything is selling out, demand is insane. So that's really great news for Nvidia stock and Nvidia stock investors. Some were starting to get concerned and nervous about Nvidia stock given how much it's already risen. Year to date, Nvidia stock price is already up 148% as of this recording. So a lot of investors look at this market price increase and think to themselves that Nvidia is overvalued. I know a lot of investors make that mistake. When you're looking at a market price of a stock, that's not enough information to determine if the stock is expensive or cheap or undervalued. You need to look at what you're getting in return for the price that you're paying, right? If I told you Coca-Cola for $1, right, and ask you if that's expensive or cheap, that's not information. That's not enough information for you to tell if Coca-Cola for $1 is cheap or expensive. You would want to know how much Coca-Cola. Is it a drop, or is it a 20-ounce bottle, or is it a 2-liter bottle, or is it a 24-pack case? That will determine whether $1 is a cheap price for Coca-Cola. I'm not just saying Coca-Cola $1. Not enough information. The same goes for stocks. Investors make the mistake of looking at a stock, looking at the price increase and saying, oh, it's too expensive. Well, you're not doing enough research there. You've got to look at what you're getting in return. And let me share with you what investors have gotten in return for Nvidia stock. In the last year, in the second quarter specifically of fiscal year 2025 for Nvidia, its revenue jumped by 122% to $30 billion. Its operating profit jumped by 174% to $18.6 billion. So with revenue jumping 122% and profit jumping 174%, that justifies a stock price increase of 147%. You're getting so much more in return for what you're paying for Nvidia stock. You're getting 177% more in profits than you were getting in the same time last year. So it's justifiable to pay a higher price for Nvidia stock because you're getting so much in return. What matters is the valuation. Is the valuation cheap? Is the valuation undervalued? And I'll talk about that a little bit later in the video. The CEO went on to say in the interview that Blackwell is going as planned. Everybody wants to have it, and everybody wants the most, and everybody wants to be the first. So Blackwell delays have caused concern for some investors, with many looking to the rollout as the next big catalyst for the chip maker after a recent stock slump fueled by the mid-July sell-off. And that's true. Nvidia's stock price, since it did the stock split, has been kind of muted, right? It started off the year soaring up to new highs, and then it's been kind of flat to down a little bit. And I can show you the chart here. Since, let's say, June, it's been flat or down since those peaks. But Nvidia's performance in terms of revenue and profit and cash flow still improving, still growing very nicely. So investors are getting so much more in return for Nvidia stock because the price has remained flat to down. Meanwhile, profits continue soaring and revenue continues soaring. What is slowing down for Nvidia is the rate of growth. Now, I highlighted 122% and 174% revenue and operating profit growth. Those levels of growth are going to slow down. They're bound to slow down. This is the initial surge for Nvidia on the back of the rising effectiveness of AI and the enterprises clamoring to get their hands on these capabilities. But once Nvidia's sales ramp up to these new levels, it's likely to grow further from here, but the rate of growth is going to slow down. And that's to be expected. You shouldn't have expected Nvidia stock or Nvidia's revenue and profit to continue soaring at these levels. This is just that bump up, and then from there, it'll grow more slowly for the next 5, 10, perhaps 15 years, because this is still the very early innings of the artificial intelligence build out. It's still in the very early stages. Market forecasts suggest that spending on artificial intelligence is going to grow by another $1 trillion between now and 2030. So we're just getting started. Businesses are just now building these capabilities, realizing the return on investment, and then going out and spending more after they see the return on investment is so attractive. So I mentioned I would talk about valuation, and this is the metric that will tell you if Nvidia stock is expensive, cheap, or fairly valued, and that is the forward price to earnings, or the price to free cash flow, price to sales, enterprise value to EBITDA. These valuation metrics that compare the price to something you're getting in return. In this case, this compares the price that you're paying with the earnings that you're expected to get over the next 1 year. So you're paying a certain market price in return for the earnings per share over the next 12 months. And a multiple of 31 is relatively cheap for a company like Nvidia, which has its growth prospects over the next 5 years, which has its competitive advantages, the balance sheet, the business model, all of the things you're getting with Nvidia stock. To pay a forward price to earnings of 31, in my opinion, is still cheap. So regardless of how much the market price increases, if a company's earnings and cash flow increase as well, you're not necessarily paying a higher price for the stock. You might be paying a higher dollar value, but you're getting in return so much more that your value is still attractive. And that's the case, I feel, with Nvidia stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.